We're joined at this hour by Pashupati Advani of Global Foray. Of course, Kunal continues to be with us. Pashupati, great having you.
Hi, Harsh.
What is it? What is it that you're seeing on ground, Pashupati? What are you finding interesting?
Well, unfortunately, I think we're just floating in a range because every 2 days we get news of the straits getting open, the straits getting closed. And obviously, the straits getting closed is not good for us at all. So, I mean, it was declared over the weekend that they're shutting them again. So, therefore, our markets have reacted. Obviously, the reactions are not as, vociferous as they could be, but they are showing signs of pain because, we do need oil and gas and all the other things from the Middle East. And we're also sending exports to the Middle East to go out to the rest of the world. So as long as that channel is shut, we are experiencing difficulties, and India Inc. is having some issues in all this. So that's my basic thought about what's going on.
Right. So Pashupati, hi, afternoon. How do you stay afloat? What sectors are looking safer right now as opposed to the ones sensitive to news flow from West Asia?
Well, the ones that have succeeded so far have been the pharmaceutical sector because we continue to take more tablets, and also the export market is still there for pharmaceuticals, so they continue to do well. And of course, anything to do with India, whether it's infrastructure, whether it's cement, whether it's steel, there is a lot of activity going on, particularly from the government side to finish roads. For the real estate people, they're finishing their buildings under RERA. So, these commodities are required, and you are actually building something new. So that is all very good, and that's all very productive. But in the meantime, you have, the banks that are floating, not doing that much. The Reliance itself has been all over the place. It's up 2 days, down 1 day. So, that's also another challenge, even though the big IPOs are coming. But, I really feel one thing, which is that we're waiting for this FCNR-B deposits to come to India, which will definitely come. Some part of it will come into the public markets. And because of this way the scheme has been positioned, people are not excited about it. You need a little more excitement, which means the government is going to have to either request the banks to pay a slightly higher rate, which they will cover, or, the bond markets will have to allow money to be borrowed at a slightly lower rate, because it's very, very difficult to get 3, 4, 5-year money with India risk at less than 5.5%. And that's kind of been the stumbling block, according to me.
And Pashupati, of course, some numbers have come our way. Anything standing out to you in terms of numbers or commentary?
In terms of results for companies?
That is
what
correct.
You're talking about?
Yes, based on the updates we have.
Yeah, so obviously, this is the first beginning of the cycle. So the good companies come quickly out and give you results, and the faster companies get rewarded. The real challenge is what happens to the second half. The first half have come within expectation, maybe slightly higher than expectation, which is good. But I think the second half is where the difficulties will come, and we'll see which of those companies are hurting a little bit. Like, for example, last week, the OMCs were down because of refining margins and oil going up. And, it's really going to be very interesting to see what their results are going to look like. And I think, that we'll take it forward going from there.
Okay. Pashupati, coming straight back to you with regard to the lenders in particular, those 4 large banks that have come out with numbers, the NIM compression, probably a bit of a concern, but talk to us about how you're looking at the numbers overall. Do you believe that their value buys at this point? Can it go lower? Just based on the numbers that we've clocked?
See, the NIM compression is obviously of concern, but if all of a sudden you get another 100, 200 billion in FCNRB, that's more money to lend, and then the earnings will then go back up. So I think we're waiting, and again, the markets in India tend to be based on flows of money. So once money starts coming in from abroad, and it's going to suddenly come. It's just suddenly people are going to say yes, let's do it. A lot of my people that I talk to are looking at maybe doing some leverage, so they're waiting for term sheets. So far, the banks have not been that aggressive, but suddenly, if they decide they're going to do it, then the money will come very quickly. So I think that is that's going to be good for India, because at least the money will be in the system, And then, that's what we need. We need long-term money that's lying there. This is 3-year, 4-year, 5-year money that can't go away. So that's good. I mean, that's all very good for our country, and that'll bring stability. In the meantime, we're floating up and down. I will just give one word of caution. Donald Trump seems to be extending the war with Congress for 60 days at a time. He's just done it. He's got one more shot to do it, because after that in November, it'll be a new Congress, and I don't know if he's going to still have the majority, plus some senators and congressmen in the last month, some 4 or 5 of them have actually passed away. So, that's another challenge. The numbers are changing. So he's not going to be able to control and do a war if he loses control of either Senate or Congress. And it looks likely that one, if not both, will be lost in November this year.
Interesting. In fact, since we're talking about the lenders, banks are clearly have been in focus.
Okay. So Pashupati, would you prefer the smaller banks over the larger ones? Therefore, growth will be faster there, likely. So some bit of that pessimism may actually go away with regards to some of the smaller banks. Also, how do you look at PSU banks versus private?
So I actually think that this FCNRB, the bulk of the money will come into the known big names, and also the ones which are like quote unquote quasi multinational banks like RBL, which now is now owned by Emirates NBD, and DBS, which is a subsidiary of the Singapore Bank. So I think those are the kinds of banks which are going to get, plus of course the big ones like ICICI, HDFC, because they are the ones who have offices outside. I mean, they are the ones who have a presence outside, and they're in a position to get that money and arrange the leverage. So I think that they're going to benefit. For the second tier and smaller private banks, I think it's going to be difficult. It's not going to have that much money walking in the door. And the other thing that when you mentioned on PSU banks, it's even lower in the totem pole, according to me. State Bank apart. I mean, State Bank is going to obviously there because they have offices everywhere, but maybe PNB. But I mean, once you get to the next level, and Bank of Baroda also, maybe get to the next level, it'll be difficult for them to raise money in that space. And I think that's very, very important. They all need to get money from that space once the window opens properly.
Pashupati, what's the view on IT though now? I mean, valuation attractive, but of course, it's very case by case basis right now. Still awaiting what we're going to hear from Infosys.
So I actually am not wild about that sector at all, because I honestly think that the business model has changed. I am not seeing any proof, either guidance or in terms of products and things like that, of any of our big IT companies who have been able to pivot properly. They're all trying to pivot. There's like, let's say, a quarter pivot, but they've got hundreds of thousands of people working for them. And I think that, unless there's a complete pivot and business comes to us, it's not going to happen. And this pivot has been very, very quick because of AI coming into the system. And, yes, those who are able to get engineers who are able to program AI will survive, but that's only going to be like 10% of the workforce. It's not going to be the hundreds of thousands of people that are working. So I am actually not very happy with that sector.
Pashupati, what is it? How are you looking at some of the other pockets? There's this huge transition from where auto and companies are now doing, or foraying into the aerospace kind of segment, right? How are you looking at some of those themes? Could they be decadal themes? Are valuations justified? Is this an opportunity to go and pick up some of those names?
So I think what a lot of companies are trying to do, they're trying to split that business. So they're trying to put in a separate legal entity and then float it and split it out, because then it gets benefits from this Atmanirbhar. It also gets benefits from being able to get into the defense sector, and the multiples of defense are much higher than the multiples of the auto companies. So in terms of delivering value to shareholders, I can see a lot of companies actually splitting into two and putting their defense business separately and taking it forward like that. So there's going to be a lot of interesting opportunities that are going to come out of this. And plus, some of them are involved in electric, so then they're going to split off those businesses also, that, we're in the fully electric business, so our parts are going into electric vehicles. So I think those are opportunities that are going to come up. And anyway, the main auto companies seem to be, on fire, because stuff is getting sold and people are buying more and more cars and vehicles and two-wheelers and everything. So those numbers all seem to be good.
Okay. The other one which is buzzing in trade, Kunal, is a Mrs. Bector's. The other one which is buzzing in trade, Kunal, is a Mrs. Bector's. It's not the first day. It's the third or the fourth straight day where the stock is on a tear, 13% higher in trade today. On charts, still a buy. Is this still an opportunity?
Yeah, it's a very good move for Bector Foods, because the stock has not just moved back from a 5-quarter underperformance, but I think from those 175 levels moving towards 210, 212 mark, it's now on the verge of breaking back above its 200 moving average. If this happens for Bector Foods, this could be a very strong breakout after almost like 12, 13 months of the stock trading sub the long-term moving averages. The last time when the stock had broken past below those averages was when the stock was at 300, 350 range. So which means that we could be looking at such a kind of a strong multi-month, multi-quarter up move for Bector Foods. Also, I think on the quarterly charts, the fact that the stock is down for the past 5, 6 consecutive quarters also brings in a case that there could be a good amount of mean reversion which could be at play. And ideally in such scenarios, we look at the previous 2-quarter highs to be retested. That level is around 250 mark for Bector Foods. So in multiple scenarios, we look at a potential possibility of the stock in the next 3 to 6 months hitting zones of 250 plus at least over the near term.
Okay, that's that on Bector Foods. In the meantime, let's also take stock of what's happening within the metals universe, and just going to bring up some of those metal counters for you in trade right now. While you are seeing definitely a good move on a JSW Steel, let's check in on the likes of a Hindalco, Nalco. Hindalco also holding up 0.6% in trade, and Tata Steel will just come up for you on your screens next. In fact, we chatted with Jayant Acharya, the joint MD and CEO at JSW Steel, who are maintaining their FY27 volume guidance. He also says that the Blast Furnace 3 expansion has now been completed and the benefits are going to be seen in the Q2 or Q3.
So the blast furnace 3 in the first quarter was not operating much. It just started towards the end of June, and it would ramp up in quarter 2 and subsequently fully be operational in the next few months thereafter. So quarter 3 and 4, you will see a much better impact of the BF3. The furnace has been upgraded by an incremental 1.5 million tons for the full year capacity. So I think we would be able to capture a major part of that as we go into the full year.
Pashupati, just wanted to pick up on the point on staples as you see it right now, because just going by the quarterly updates from a Dabur, Marico, etc., it doesn't seem that the weakness in monsoon or the food inflation impact has quite hit the rural economy so far, and the demand seems quite intact there so far at least.
Yeah, for sure. And I think people are moving towards branded product, and I think that's also making a difference. It's a slow transition from the unorganized to the organized sector, and it's beginning to happen in tier 2 and tier 3 cities as well. So, what you're suggesting, the FMCG sector will obviously benefit, and maybe Mrs. Bector's Foods, which you mentioned a little earlier, would be one of the ones that is likely to move faster because it's just probably being opened in those markets. And I think that's maybe that's a vision that's also coming, as of course, the Daburs and the Maricos of this world, which continue to do better.
And Pashupati, how do you look at the entire metals pack? I'm just trying to understand, 8-9% correction in frontline names, good opportunity to buy?
Yeah, I think, as I mentioned, the metal sector is where you're actually producing value. And I think that, that's definitely a sector that should be looked at. I actually, any company that's doing specialty metals, very difficult to find. But I mean, otherwise, you've got aluminum is obvious. And, the specialty steels also will be, ones which will be worth looking at and worth picking up. I think that's one of the sectors that's going to continue to do well. There's been a little bit of hubbub because of the breakup of Vedanta into its various pieces, and people are not understanding, what is there. But that will also settle, and then that will also, people will start buying whichever, whether it's Hindustan Zinc or copper or whatever. So they'll decide which of the Vedanta babies they want to buy, and I think that then people will decide, and then these things will stable. But all in all, I'm very comfortable holding metals.
And also, I mean, Would you in this equity market would you go and buy equities? Would you go and buy gold, silver? Would you go and buy bonds at maybe 7%, 10-year India? How should asset allocation really play out, and how should one really do their allocation at this juncture? Give us a sense of that.
So the one thing, this is my hypothesis, that all the countries that have used their oil when the West Asia crisis started are filling up or have filled up again, and to do that they've sold gold. That's why gold has come down to $4,000 type, and which is a solid support level. I think that once they finish buying and they filled up their tanks again and they get the deliveries, then people will go move back into gold. So I think that's one movement that is bound to happen. The other thing that's going to happen, according to me, is that you mentioned about equities versus 7%. 7% is attractive, but Indians stock market players have got greedy in their old age and they want 14 and 15%, which they're now realizing doesn't happen easily. So I mean, I'm advocating that you should have some money in 7%, and then you take your bets on sectors that are going to deliver value for India, and ideally sectors that are not import dependent. So, power is one, telecom is another. These are the sectors that.
Right, makes sense. Kunal, what is your reading on the charts, and does it seem like once again we are set for a meaningful bounce in gold prices?
It looks like, Aisha, because this $1,500 correction for gold prices on the dollar terms from 5,500-ish start of this year towards 4,000 mark, a major retracement cycle has completed for the gold prices, and that I think could be a major factor, because generally we've seen that when gold prices come back into a retracement, especially when the indicators were significantly overbought 6-7 months back, that cool-off generally ends closer to a major retracement zone, which has happened this time around also for the gold prices. So now I think the base over here, what we're looking out for is, which is a major support for the prices in the near term, are at the sub 4,000 mark on the dollar terms where we've hit the lows. Also, I think on the indicator fronts, we were looking at the last 3 to 4 months of chart patterns. The indicators for the gold prices have also come back into an oversold territory. So that also calls in for a decent bounce over the next maybe 1 to 2 months.
And gold over silver, Kunal?
So I think silver, which was at an exuberant stage in Jan end 2026, there was the gold-silver ratio, which had hit an extreme where silver had actually significantly outperformed gold prices. We've seen the ratio now to come back towards the mean. So which means that when we look at the historical context of what happens when the ratio comes back towards its mean or closer to its mean, it's where gold prices, they generally tend to perform or at least show signs of slight outperformance with respect to silver prices. So if I have to anticipate the movement, say for the next 3 to 6 months, if the prices move up higher for gold prices, silver would tend to underperform or be at max at par performance with respect to gold.
And Pashupati, do you have a view, gold versus silver?
I mean, I think they're both equally good. Gold is easier because more people, quote unquote, follow it. But silver has an industrial use, which means at the end of it all, you need to replace certain things. It's particularly strong in the semiconductor industry and other such industries which are required for India's growth. So, but at the moment, I kind of agree with Kunal. It really doesn't matter which you buy. One may temporarily outperform the other, but they both head in the same direction.
That really seems to be the case. The big movers.
Versus silver?
I mean, I think they're both equally good. Gold is easier because more people, quote unquote, follow it. But silver has an industrial use, which means at the end of it all, you need to replace certain things. It's particularly strong in the semiconductor industry and other such industries which are required for India's growth. So, but at the moment, I kind of agree with Kunal. It really doesn't matter which you buy. One may temporarily outperform the other, but they both head in the same direction.
The big movers today, of course, have been some of the earnings reactions. Look at a PNB, for instance, that's spurt up very nicely. There's, of course, JSW Energy, like we were flagging off. Trent has done very well. Ultratech Cement came out with a solid set of numbers, and that as well has bounced up quite nicely. But there's also Bajaj Auto, which is expected to come out with a strong first quarter number, driven by robust export demand and healthy earnings growth as well. In fact, let me take it across to Avi and understand what exactly is the ET Now poll pricing in.
Bajaj Auto is going to come out with its Q1 FY27 earnings, and let's have a look at what we are expecting here at ET now. We expect the revenues to come in at around 16,960 crore rupees, which will be up by around 35% on a yearly basis, and the EBITDA to come in at around 3,400 crore rupees, which will be almost flattish on a sequential basis, up by just a mere 2%. Talking about the adjusted PAT will be around 2,760 crore rupees, which will be up by 2% on a quarterly basis. Talking about the EBITDA margins are likely to see an impact because of the commodity cost pressure that the automobile industry is facing, and the margins are expected to contract by 70 bips, coming in at around 20.1%. The export market has performed very well for Bajaj Auto, with the two-wheeler and three-wheeler exports outpacing the domestic demand, while the demand in the domestic market has seen a modest growth for the quarter gone by. The increase in revenue is led by the increase in exports, better volumes, better realization, the price hikes that the company have taken, and a favorable forex position that the company holds because of exposure to the export markets. The margins, as I told you, are likely to contract basis the commodity cost pressure, and the earnings are reported to be healthy on a top line basis. What will be important to see is the margin impact in this quarter. A few of the things that we would look out for is the demand outlook that the company would give for both the domestic market and their export market, the kind of margin impact that the commodity cost has, and what the margin number would be, as we expect the margins to contract by around 70 bips, and the kind of price hikes that the company would take to offset this margin impact. So this is our preview for Bajaj Auto for the Q1 FY27.
Okay, that's that on Bajaj Auto. Kunal, stack up some of these two-wheeler charts for us from autos, and what's it looking like? And is still Bajaj and TVS the strongest of the lot?
So I think TVS and Bajaj are the ones which are emerging to be a better breakout candidates. Recently, we've seen almost like a 7% to 6% jump up in the prices for Bajaj Auto, and the stock, which had actually underperformed for the past 3 to 6 months prior, the stock had struggled to break past about the 10,800, 11,000 mark, corrected from those levels, and now it's trying to come back towards a resurrective move. Eicher Motors is the other one, which is of course one of the strongest ones so far on the charts. Even in the short-term time frame, the stock is now, I think, just 100, 120 points away, which is broadly 2% from the current market price in terms of a potential breakout. TVS Motors in this leg has been a little bit more slow mover. The stock has somehow taken or gone into a bit of a range at 3,500, 3,650 thereabouts. So it's been stuck into this 3, 4, 5% move for TVS Motors. But I think I would sense that Eicher Motors as well as Bajaj Auto are the ones which are strong. Hero MotoCorp, the stock keeps on showing those signs of emerging as potential turnaround. But then when we look at this cumulatively over the last 3 to 4 months, the stock has been consistently making a pattern of lower highs and lower lows. So we need to see one level of a breakout higher for Hero MotoCorp. Maybe that could happen once the stock breaks 5,100, 5,150 mark.
Okay. The other one will be a Bajaj Auto, of course, which will come out with numbers. I just very quickly, Pashupati, do you have a view with regard to some of these two-wheeler makers, rural demand, if at all that were to continue? Because we have seen decent demand on the rural side of things. Is the two-wheeler place a good kind of sector to play?
Yeah, obviously, I think it's a leading indicator of what's going on in rural, and it's the first, first port of call, if you want to call it. And I think that's, you're seeing the numbers because of their ability to be able to sell in rural. I wish it would be turned the other way, which is that better roads produce better vehicles, but this way it's more vehicles is hopefully going to turn into better roads. Let's hope that prophecy comes true.
Okay, that's the take coming in on some of the two-wheeler majors. We're going into close, of course, with weakness across the banking names. Yes Bank, AU Small, HDFC Bank, Axis have been some of the key heavyweight drags. Add to that a Kotak as well, which also fell about almost 2% odd. Reliance has gone in extremely soft after its numbers. While it started off okay, and then from there just has been range bound. Although the move on Friday ahead of the numbers, which was much stronger, it had a move of about almost 2.25% coming in. Today it's been much of a fizzler really in trade. Tata Motors PV, Wipro, Asian Paints, Tata Consumer, flat for Bajaj Auto, flat for Eicher Industries, Eicher Motors rather. Eternal as well has been a little bit soft. And then BEL, which is also closing in just mildly soft for the day. Pashupati, defense seems to have gotten into a little bit of a sideways and consolidation mode. You think this is a good buying opportunity?
I don't think so, because I don't think that, fund managers are looking at it and saying, Indian defense is the best thing since sliced bread. We did see a lot of buying when a whole bunch of defense specific funds got set up, and that got money from the public and that got invested. So I think it's kind of losing its luster. It doesn't look like we're going into the West Asia war, that's for sure. So, I think the pressure has come off to try and produce, defense stocks. So, I think they've sort of been forgotten at the moment.
Kunal, how is defense looking on charts? Would you also avoid that entire pack?
Yeah, nothing exciting on the charts. Most of these stocks are still into their sluggish downtrend or lack of that volume phase for themselves. These stocks have struggled to show any kind of a major breakout in the recent past, at least in the last 2 to 3 weeks. So that's why I would probably just about keep it on the sidelines, maybe wait and watch for these different stocks.
3% on PSU banks. Really, that's the space which is actually lit up in trade and has gotten better as the day has gone by. In fact, Realty, Pashupati, very quickly, is that something that you believe will be a trend over the next 12 months or so in terms of something we can pick?
No, I feel Realty, the trigger is not yet shown, because I think that prices are soft. They're going to have to carry. There's a lot of, put it this way, there are a lot of opportunities, but each builder has got limitations, and it's going to be very interesting because, we've got half a dozen really big builders, and then we've got lots of intermediate builders, and then small builders which are not listed. I just feel that the industry is also floating because there's a lot of stock around. And, some of the numbers that I'm hearing are quite scary, and as to how much property is lying vacant and how much is going to be produced. So I would just sit and wait. There is going to be a trigger. At that point, it'll be time to get in, but I don't think that now is the time.
Okay, Pashupati, always great having you on the show. Thank you so much for your time today and joining in.